What's going on, y'all? I wanted to talk about some dividends for a minute. It's been a second, so let's get right into it. Let's talk about Realty. So, Realty is another REIT stock. So, Realty it's a special REIT because they pay a monthly dividend. You know, most companies pay dividends quarterly or annually, but you have some that actually pay monthly, and Realty is one of those companies. And as you can see, we are on their portfolio page right now, and they own over 6,600 commercial properties, meaning that they own a lot of these commercial buildings that some of your favorite businesses have to pay rent to. Some of the places that we go to every day, every week, every month, a lot of your favorite companies have to pay rent to Realty. Over 98% of their buildings are occupied, and they are in 56 different industries. So that's big. This is why we do our research and we do our homework, because we have to find out information like this. This is vital information that was going to either sway you to invest your money in this business or not invest and go on to the next company. So this is just like they give you a list of like their top 20 companies that they are doing business with right now. They're not going to give you the whole entire list, because you see that will be a whole bunch. But I'm going to just run off some of the names of some of the top companies that pay rent to Realty. So you got Walgreens, which they own 248 Walgreens. They leasing out their buildings so Walgreens can operate and do their daily operations through that building, if that makes sense. Walgreens has to pay rent to Realty every month. A 7-Eleven, they own 431 7-Elevens. 7-Eleven has to pay rent to Realty every month. Dollar General, FedEx, Dollar Tree, Family Dollar. You got LA Fitness on the list. You got AMC movie theaters. You got Regal Cinemas. You got Walmart. You got Sam's Club, Lifetime Fitness, Circle K, the gas stations, Speedway, Marathon, that's another gas station. BJ's Wholesale Clubs, similar to Sam's. CVS, Home Depot, Kroger, like all of these businesses have to pay rent to Realty. Like all of them. Let's go back down the list. Like they own 273 Circle Ks. So 273 different gas stations that are spread all over the U.S. have to pay rent every month to Realty. This is why I like investing in REIT stocks, real estate, because I'm owning real estate. So all these different companies are paying rent to me every month. I'm owning these commercial properties. And by owning Realty, you are owning each and every last one of those. You're owning a percentage of them. So how dope is that? So these are just, as I said, like their top 20 clients. They have many, many more, but those are like the top 20 clients. So let's get into the dividend portion, because that is very big with REITs. REITs pay 90% of their profits back to their investors in the form of a dividend. What is a dividend? A dividend is basically a reward payment. It's a thank you payment for investing in their business. So what a lot of companies do is they reward investors for owning stock, owning share in their business. So by you buying a share of Realty, the CEO is basically like, thank you. Thank you for thinking of us as a good business that you want to invest your money in. So I'm going to give you a payment every month. I'm just going to give you some free money. This has nothing to do with the stock. They're just going to give you some free money every month just as a thank you, because they want you, to keep investing. They don't want you to sell your shares, pull your money out. They want you to keep investing. So that's what the dividend is. Dividends are very important. So let's click on this tab right here. So this talks about their monthly dividend. Okay. So right now they're paying 23 cents a month to shareholders for owning a Realty. So that might not even seem like a lot to you right now. You're looking at that like 23 cents. Like, what's that? Or $2.82 a year. Like, what's that? Well, I'm going to show you what that is. So this is per share. This is for one share. You're getting 23 cents every month. Okay? For one share, you're getting I'm sorry, not 200. You're getting $2.82 for that one share. Okay? So let's just do the math real quick. 23 cents. That's for one share. So let's multiply that. Let's say we own 100 shares. So we own 100 shares of O Realty. So we're getting $23 every month for our 100 shares. And so let's times that $23 a month by the 12 months in a year. So they're giving us $276 of free money. This has nothing to do with the stock. This is just a thank you payment, a reward payment. $276 every year just for owning 100 shares of O Realty. Like, that's dope. That's really, really dope. You're getting free money. Free money that you didn't have to do anything for. You didn't have to lift a finger for it. This is passive income, that's coming in your pocket that you can do whatever you want to do with it. Free money. Again, this is the kind of shit that they never taught us about in school. They never taught us how to do any of this. And I understand. I mean, they don't want us to know how to do this. They want us to continue to go to work, get paid, spend our paycheck, be a consumer. The rich want to keep getting richer, and they want to keep everybody else out the loop. They don't want them to learn and open up their mind and start using this knowledge to do and be so much more. All right, so let's go back to the dividends for a second. So as we're looking at their info on their page, we see since this company started paying dividends in 1994, we can see that every year their dividend has increased. Every single year it's increased. 2015, 16, 17, up to the current year, 2021, which is now $2.82 a year they're paying. Last year they were paying $2.81. The year before that they were paying $2.73. So within a couple years they're going to be paying $3 a year for a dividend. And that's for every share that you own. It's important, y'all, to do your research. Do your research. Do your research. I can't stress that enough. Do your research. And learn about the companies you want to invest in. Learn about the dividends. Learn about the debt to income ratios. Learn about what the company actually stands for. Learn who their CEO is. Learn what type of products they sell, what type of service they render. You want to learn about these companies, and we do that by doing the research. We have to read. We have to do the research. So I want to go ahead. I got Fidelity pulled up, and I want to go ahead and show you the DRIP. And so the DRIP is the Dividend Reinvestment Plan. So that's you taking the dividends that you receive for free from whatever company you're invested in, and what you're going to do is figure out the number of shares you need to buy in order for that company to buy a share for you. Is everybody still with me? I hope so. If not, I'm gonna break it down a little better. So a DRIP, it's a real thing. DRIP, you can look it up. It's a DRIP, Dividend Reinvestment Plan. So we're gonna take Realty. We already got it pulled up. Okay. So you see every quarter, they're basically paying out 70 cents. This is the beginning of this year. You see January, February, March, they paid out that 23-cent dividend. So roughly 70 cents a quarter. And there's 4 quarters in a year. Every 3 months is a quarter. January, February, March. Quarter 2, April, May, June. Okay, quarter 3, July, August, September. And then you end the year with quarter 4, October, November, December. So 23 cents every quarter. So this is 2021 right here. Okay, so quarter 1's done. The 70 cents has been acquired. Okay, so quarter 2, you see it's in purple. And the reason quarter 2 is in purple is because we went through April and May, but June's dividend hasn't been received yet. And that won't be paid out until June the 15th. That's when I will receive another dividend for all my shares of Realty. Okay, so basically what you want to find out is you want to find out how much of a dividend they pay annually, which we found that out already. It's $2.82. If we go to their website, we go back down here, and it tells us the annual dividend. Annual means every year, $2.82. That's the monthly dividend. Okay, so we got our $2.82. That's what they're going to pay every year. Next, we want to figure out what's the current share price of Realty. So right now, Realty is around $70.42 a share. That's for one share. Okay, so we need to see $2.82 a year is what they're giving me. How many shares do I need to buy for this $2.82 a year to turn into $70.42? So let's just plug in a number. We're going to say 25 shares. Okay, so 25 shares puts us right at $70.50 at the end of the year. So with that being said, we now know if we buy 25 shares of Realty, we are going to get $70.50 every year until the dividend, increases more. But we're going to get $70.50 at the end of the year. So we know with that $70.50 that they're giving us free money, we're going to be able to buy a share of Realty, but we're not going to have to use our money. We're going to use the dividend. So in other words, they are going to start paying for a share for you. So you're not going to have to use your money anymore. Now you're going to use the money from the dividend. So the free money that they're giving you every year is going to get reinvested back into another share of the company, which is a DRIP. It's a Dividend Reinvestment Plan. So now it's on autopilot. And this is what I try to do with all the companies I own. I try to figure out how many shares do I need to own so I don't have to put my money up anymore, and I can just let the company put the money up for me. That's like the ultimate, drip. You don't get no better than that. So y'all mean to tell me y'all finna give me $70.50 of free money, okay? I'm gonna just reinvest that. So now you guys are buying a share for me. So every year it's on autopilot now. Now I don't even have to touch it or look at it anymore because I know every single year, Realty's gonna buy a share for me. I don't have to buy the shares no more. So just think about that. That's what a DRIP is. And you can do this with any company. figure out what their current stock price is, figure out what their dividend is, and figure out what their annual dividend payment is. Then after you figure that out, you'll be able to do the math and, see how many shares you need to own in order for this company to buy the shares for you. So we're no longer having to work as hard, and we're no longer having to foot our own money up to buy another shares. And okay, so we need 25 shares of Realty to get this free share every month. Does that mean we need to buy all the 25 shares at one time? No. You can start off buying 1 share of Realty. You can buy 1 share a month. Everyone doesn't have that much money just to drop down to buy 25 shares of Realty. So let's just do the math real quick. If we buy 25 shares of Realty times the $70.42, that's basically $1,760. Everyone doesn't have that to just drop right up front for 25 shares of Realty. So investing is taking baby steps. Start slow. We're going to start with 1 share. That's $70.42. And then we're going to buy another share. And then we're going to buy another share. And then we're going to buy another share. That's all you have to do. Take it slow. Take baby steps. Dividends. I can't stress them enough. This is a very, very good way to build wealth, over time. Wealth is built over time. Investing isn't about a quick dollar, a quick flip, a quick come up. If you're looking for that, you're looking in the wrong place. Investing is a game of patience, knowledge, and skill. You just have to be patient. You have to buy good, valuable companies, and you have to hold them for as long as you can. The longer you hold them, the better. I'm going to try to come back and do some more of these type of videos because I've been getting good feedback on, just giving the information and actually breaking it down so you're actually physically seeing what it looks like, share by share. Realty, check them out. As well as plenty more REIT stocks out there. Realty is one of the ones that pays monthly, as you can see, the monthly dividend company right there. Check them out, y'all.